Hello, I'm David Chaston with 989, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news of a full-blown banking crisis that is brewing in Italy. Firstly, however, the final growth data for the giant American economy in the first quarter confirmed it slowed, but not as sharply as previously estimated, with gains in exports and software investment partially offsetting weaker consumer spending. The final growth for the first quarter is plus 1.1% rather than the 0.8% pace reported last month. Their economy grew at a rate of 1.4% in the fourth quarter of 2015. Consumer confidence in the US took an unexpected turn for the better in June in a survey out overnight. Perhaps strong house price gains helped. And stocks are sharply higher on Wall Street today, with equity investors piling back in. The S&P 500 is up almost 1.5% on the day, with the later trades accelerating the trend. Staying in the US, the final settlement between the various regulatory parties in the US and the car maker Volkswagen is tougher than we reported last week. In fact, the car maker may end up paying over $20 billion to resolve the diesel's deception. They've agreed to buy back cars if that is what the owners want. And they are required to spend almost $7 billion to develop zero-emission vehicle technology. A major casualty of the Brexit shock may be the Italian banking system. Italy is preparing for a €40 billion rescue of its financial system as bank shares have collapsed on the Milan Stock Exchange. An Italian government task force is watching the markets hour by hour, pledging all steps necessary to ensure stability for the banks. This is a big deal, but it has its roots in 2008 because those earlier problems were papered over rather than being dealt with at the time. A collapse here is a sort of trigger the Europeans just don't need. In New York, the benchmark US Treasury 10-year yield has not fallen any further and is still at 1.46% in late trading. Locally, swap rates flattened to their lowest levels yesterday, with the 1 to 5 curve now at just 7 basis points and the 2-10 curve at 42 basis points. Those are both post-GFC lows. Japan's benchmark bonds are now all yielding less than 0.1% for the first time ever, pushed down by the global surge in sovereign debt prices following Brexit. The rally in Japan pushed yields on the nation's longest debt, the 40-year bond, to just 0.065%. At the same time, New Zealand's, Australia's and South Korea's 10-year yields all dropped to unprecedented levels. Our New Zealand government bond 2020s and 2021s may in fact soon yield less than 2%. The US benchmark oil price is up today, now just under $48 a barrel, while the Brent benchmark is just over $48 a barrel. The gold price is down $6 to $1,314 an ounce. In a small spurt of futures trading yesterday, prices for whole milk powder softened. We'll get a better idea of this market tomorrow morning with the next global dairy trade auction. And finally, the New Zealand dollar starts a little firmer, now at 70.2 US cents, 95.4 Aussie cents, and at 63.6 euro cents. The TWI is now at 74.2. And incidentally, the Chinese have pushed their currency lower against the US dollar again in their overnight fixing. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.